forever. So one thing you'll never worry about when we run things is they'll move quickly and you'll have good quality conversations. The reality of, again, borrowing from other jurisdictions and borrowing from other stories is to create confidence. That's sort of the key message that we've had here. And what the key message you'll hear over a number of days is when it comes to stories, the reality is that Mike Novogratz's story is pretty heralded. As well known as anyone in the space. And I was very happy when I spoke to Ian, who one of the people that DM'd me, said that you meet nice people in the DMs, and we just had a conversation about his experiences, which are very interesting in their own. The truth is we could fill a lot of the time on stage with Ian talking about his experiences in the US and now coming back to Australia and looking at what our ecosystem looks like. But Ian was good enough to ask Mike whether he'd participate, and Mike agreed. So I'll introduce Ian to the stage, to the lectern.
Cool, thanks. How's this working? Great. Hey, Mike.
Yeah, good to see you.
G'day. So, look, maybe first of all, quickly, why is an investment banker sort of sitting in front of you at a crypto conference? I've worked for Goldman for 20 years, but spent the last decade or so in New York, and for the last 2 of those years, until I returned to Sydney at the end of 2020, had the chance to work with Mike Novogratz at Galaxy Digital. Full disclosure, I remain a small shareholder in Galaxy Digital. We'll be talking about it today. But why don't I get out of the way quickly and get to Mike. Mike, thank you for joining us. You're here in front of a couple of hundred people in an auditorium at the Australian Stock Exchange, so thanks very much for taking the time.
Thank you. Last time I was in Australia, I'd flown straight away, and I watched Californication the whole time with no sleep. And I got on stage, and in the middle of my speech, my mind went blank. And I just walked around for about 30 seconds until it started working again. And people were like, asked if it was what that was. I was like, yeah, it's Californication.
Well, I don't have that excuse, but I'll let you know when my brain returns. But so Mike, I think a lot of people here today probably know you or have heard you on sort of CNBC and Bloomberg and what have you. But this will be really the first time that I think a lot of us get to know you. Maybe spend a moment on sort of how you got into this space. And I'm thinking, you joke about being the oldest person in crypto, and you probably are. But what's really interesting to me is you had this sort of career as a sort of macro trader at Goldman, at Fortress. A lot of your contemporaries invested in sort of crypto early when you did, but you really sort of were the one who was prepared to sort of stand up and become a very vocal advocate. And so I'd just be interested in sort of why was that, what you saw, and sort of what sort of got you started here.
Yeah, so to start, crypto really is a macro story. And, you know, I got involved in Bitcoin in 2013, and it was, you know, the Bitcoin white paper was written after the great financial crises, and Ethereum was written really right around the European financial crises. And if you're macro, there was this big fear at that point of QE1 and QE2 and hyperinflation that was coming. Funny that 10 years later, we're going to actually get it. But at that point, the fears were real. And so when I stumbled across Bitcoin, I started thinking, here's a new security, or don't dare call it a security, but it felt like a security to me, right? This new instrument that was really craftily designed to play into the fears of people against centralized authority, right? There was a breakdown of trust in banks and governments, and people thought governments were going to inflate away their hard-earned savings. And so here was this decentralized digital money. And I thought, wow, that's kind of a cool thing. And so I bet on it originally as a speculative bet, because I opened my mouth like a fool one day at a conference. I was in the newspaper the next day, and I started being asked to speak on it all the time. And so that really forced me to really understand it, because you don't want to look like a complete idiot when you're standing in front of a bunch of people. And so I got into the computer science of it, and I had a really hard time because I'm not a computer scientist, right? You were the double spend problem, right? Byzantine generals problem, all these computer science, quantum computing, and what it was going to do. I boiled it down to a really simple thought that the blockchain, the Bitcoin blockchain, what Satoshi gave us was the possibility of the first digital asset that you couldn't counterfeit. And that created this concept of digital scarcity. and digital scarcity, which we're now seeing all over the place, right, with NFTs and lots of things, back then was, oh my God, we can have 21 million Bitcoin and we can know there are only 21 million Bitcoin. And that, I thought, in a world that was moving more and more online, could change everything, right? That you really could have a digital dollar or a digital unit of currency. And so that's when I got into it. I really got excited in 2015 when I went to, I know you're having Joe Lubin speak next. I'm going to try to be better than him. He was my college roommate, and I went to visit him in his offices at Consensus and talked about the Ethereum project. And I realized it was more than a monetary phenomena. It was more than Bitcoin, that the people at the core of this kind of blockchain revolution were trying to rebuild every aspect of the world in a way where trust was mathematically created. And they were going to try to disrupt the music industry, the banking industry, insurance, exchanges, you name it. This decentralized idea. And what is that idea? That idea is that we can have opt-in communities, right? You can opt into the Bitcoin community. It's permissionless. No one can tell you can be part of it or not. It's decentralized, it's peer-to-peer, and it's based around a set of shared values. In Bitcoin, no one does it better than talk about Michael Saylor when he describes, the shared values of what hard money is, or the book, The Bitcoin Standard, right? There's plenty of people that have talked about those shared values. There are now 150 million people that share those values. That's the 8th largest country in the world that own a piece of a Bitcoin, right? $1 trillion in assets. But what's interesting is it's opt-in, it's borderless. And so that really got me excited. And at that point, I had left Fortress and thought about, how do I re-kick my career? I could either stay retired as a family office, which was pretty nice. And I'd always said I only was going to go back to work if A, I could work with young people, and this is a young person's revolution. B, I'd learn new stuff. And, I'd been a macro trader, but not really a venture guy. And so much of this is venture, right? People coming up with the new ideas and innovating and iterating all the time. And see that I would have something to add. And I thought my role, which became Galaxy's role, really was to be someone who sat between the traditional financial sector and this new burgeoning industry that could take my own money and the firm's money, invest, and then take those lessons and show them to our customers in investment banking, asset management, mining, sales and trading, but also take the lessons from, TradeFi or the financial sector and bring them to this new economy and say, guys, if you want crypto to win, it's got to be part of the world. It can't be all outside the world. And so we try to be that go-between. And, we're now getting on 400 people and moving strong.
So Mike, I think you've touched there then on sort of the breadth of what Galaxy does, but let's spend a moment there because I think it adds context to then some of the other questions that I've got for you. So Galaxy, you've got your list on the Toronto Stock Exchange, progressing to NASDAQ. You've got a $5 billion market cap, a couple of $1 billion of assets on the balance sheet. You've got a $1 billion loan book. You've got $3 billion of assets under management. You're right across the space. How do you think about capital allocation as you look at sort of the broader crypto and blockchain industry? Because you've got the option to invest in the next 10-bagger NFT. You've got the option to put CapEx into your trading business. How do you think about the sort of risk returns and sort of where you put money and sort of deploy capital?
Yeah, so traditionally, a lot of our profits have been made from our investing book, right? The venture book and just owning the right coins. If it's Luna or if it's Fireblocks, which is a hot wallet that sits in between all the exchanges. We've invested early and helped companies grow. And thought that part of this whole system, and what's so interesting about crypto is, it's kind of an echo to the globalization era, right? Globalization was all about capitalism winning out over communism, if you want to think about it. And at the core of it was the individual winning out over the collective. That was the Reagan-Thatcher revolution. That was 1989 and starting this move towards where the world really all adopted some form of liberal capitalism. And it started to crack in '08 without us noticing it, right? It cracked in 15 and 16 with Brexit and Trump, and it continues to crack. You just saw in the Ukraine and Russia and China saying we don't trust America. And so crypto is set up a little bit differently. It's set up where people willingly join a community and you become owners of that community by participating in it. You become builders of the community. Every Bitcoin miner gets paid in Bitcoin, right? So it's a currency that community, or you can call it an asset that the community kind of collectively owns and moves. I find that whole move fascinating, and we're seeing it spill out all over the whole rest of the space. NFTs. I talked about unique digital objects in 2015. I talked about artists, and it still shocked me when last year NFTs exploded. And they exploded so hard, they became really the first killer app of the blockchain. Everyone always said, oh, the blockchain is a technology waiting for a problem. Well, it had its first killer app. It was, how do I connect my community through this new technology, right? Through this NFT platform. And so if you are the NFL or the NBA or Major League Baseball or now English Premier League Soccer, who just sold the rights for a fortune, how do I connect my fans to our players, to our community? If you're consumer brands, if you're an artist, you now can make a living by connecting to 300 people around the world. And so traditionally, we made our money by investing in these technologies. And I think we'll still make money there. But more and more, we're shifting our investment to the platform businesses, right? So our asset management business, our sales and trading business, our lending business, our banking business. And the idea is to build scale in more repeatable earnings, right? Being a public company is different than being a hedge fund. And so we're in that migration. I still think we'll have volatility in our balance sheet because this is a really volatile sector, and we're going to continue to use our balance sheet. But more and more of our big investment will happen in asset management, right? You can't do growth stage stuff on your balance sheet. And so we're raising asset management funds to really fill the need of what we see as institutional demand. Galaxy started at 18, and I had this expression, the herd is coming. And I was really early, way too early, quite frankly, as you and I suffered through some of the lean years. That, yes. Luckily the herd finally came, and they really are coming now. I see it when I visit pension funds in Texas or all over the US, when I visit the sovereign wealth funds in the Mideast. And so in every bucket of investing, if it's pensions or sovereigns, you're seeing institutional investors move in. And they're going to need different product than the retail crypto investor, right? We haven't had crypto mutual funds yet. Mark my word, in the next 12 months, you're going to see them. Quite frankly, people shouldn't be paying 2 and 20 just to be long crypto, right? And so if you want to get a good mutual fund investor who beats Bitcoin or who beats the Bloomberg Galaxy Crypto Index, that product is getting developed. And so it's a very exciting transition.
Maybe just finally on Galaxy Digital, people, you said there's 400 people at Galaxy Digital now. That means you've hired north of 300 people in the last sort of 14, 15 months. I think it'd be an interesting comparison for people here in this market, that flow of talent. How have you found your ability to attract and retain great talent? Where are they coming from? Traditional finance, technology? Is it young? Is it old? Your perspectives.
We try to come up with this concept of teams. And so in some spaces, if it's accounting and our technology guys, some come from more traditional places, right? Like you got to get an accountant that understands both IFRS and GAAP accounting. And so you're not getting him out of college. A lot of the cutting edge stuff, right? Our venture team, our research guys, our mining team, they're really young. Some are coming from places like Stanford, computer science, and some are coming right off of Twitter, where we're finding people in non-traditional places who haven't gone to school. I found one guy on my proprietary team who went to a college I never heard about. I realized it was a very small school that specialized in Austrian economics, which is kind of at the core of Bitcoin. You can guess he's a maximalist, a Bitcoin maximalist. And so we're trying to be open-minded about where we find people. We're trying to create a culture where we don't use the word young and old, but like excited crypto people. But there's different skill sets that need to form teams together.
All right. Let's go to the macro. There's obviously a lot going on in the world today. You've got a better mental model for sort of synthesizing all that than most. How do you sort of lay it out in terms of how everyone should really position themselves for what's going on in the world? But also, I think at the core of it at the moment, there's this issue of trust and a growing understanding that the trust that you once had in governments and sort of institutions might be eroded as an individual. What does that mean for you for sort of the space right now and going forward?
Yeah, I think it's a really hard investing environment. And stop. Just global macro investing environment. If you're commodities, equities, you name it. We had a pandemic with a response of unbelievable global liquidity. Part of the reason we have that is as globalization broke down, we went from a world, certainly in the US, but globally, of kind of neoliberal philosophy to neo-populist philosophy, right? So Trump was a populist, Biden is a populist. We're seeing populists everywhere. What does populist mean? It means you're going to spend a lot of money to try to make people happy. And so fiscal prudence, fiscal responsibility went out the door, literally starting with Trump, right? In the US, Trump grew our economy our government $900 billion before COVID. That's 5% of GDP before COVID. We were running deficits. I mean, it was a shocking expansion of government. Forget cutting taxes. That's just expanding government. And so when Biden got in, he said, well, it's my turn now. And so we lost, we talked about MMT and you could print money forever with no consequence. Partly that came from in 2009 when they started doing QE1 and QE2 and everyone worried about inflation, there was none. So people said, oh, geez, maybe inflation is dead forever. And I kept saying, my mother used to say money doesn't grow on trees. And she did. She said it all the damn time. We didn't have very much money when I grew up. And it certainly didn't grow on trees in my household. And that all came back to roost. Now we have an inflation problem, which is real, which is going to be harder to put back in the bottle than anybody expects. And so the Federal Reserve made its first move of 25 basis points. They will end up moving rates probably to at least 3, maybe 4% before they kill inflation. They had been buying securities. They haven't even stopped buying them. So now they're going to stop buying them and then they will start selling them. And so you take all that liquidity out of the space, you're going to have some major adjustments. I think stocks in general go lower, not higher, probably 25% more from here. But bear markets are brutally hard to trade, right? They trade down and then they squeeze up 7, 8, 10, 15%, and then they roll right back over. And so it makes it a really challenging equity investment environment. Rates are going higher, so owning bonds seems like a not so great place to put your money. Credit spreads should get wider as the economy suffers, right? The only way we have ever gotten out of inflation this high in the history of like the United States economics, but global economics, is to put the economy into a recession. Let me say it really loud. The only way you can kill inflation this high is to put the economy in a recession. Well, that's hard to do when you got populists in charge. And so why Bitcoin is popular is if you're a hard money guy, you're like, well, will Biden and co, will Chairman Powell literally, evoke the spirit of Paul Volcker and crush this economy? Maybe, but if he goes slow and we continue to see inflation erode and populism show up, Bitcoin looks better and better. I keep saying Bitcoin is a report card on the stewardship of fiscal policy in your country. So when you look at Turkey with crappy Erdogan, who did a terrible job running his country, you had their currency become toilet paper. When you look what happened in Russia, when you had Putin being a terrible steward of the economy, look what happened to the ruble. Bitcoin becomes a human right, a place where people could take their hard-earned work and store it somewhere, right? And so that spirit is picking up. I see it when I talk about people want to own crypto as partly a hedge. They also realize the dollar era is over, right? You can't have China say, I'm not sure I trust the dollar anymore. I mean, that's a shocking, when the SWIFT got pulled on the Russians, the US Treasury and the US dollar is no longer a risk-free rate. It's certainly not risk-free if you're Russian. It's probably not risk-free if you're China. And so, I mean, the good news is probably China doesn't attack Taiwan anytime soon because they've got 1.2 trillion US Treasuries. But all of that geopolitical distrust plays into a system that doesn't need a government to trust. And so it makes you really optimistic, crypto.
Mike, I'm getting the wind up, but I want to ask you maybe one more question. You said recently, and switching from Bitcoin, you said recently that ETH has become the currency of culture, and I think it's pretty interesting because, and this was linked to sort of some comments on sort of NFTs and sort of recognizing that there's a community that are moving to sort of denominating themselves and sort of thinking of sort of price in sort of ETH. What does that mean for you sort of going forward? I mean, NFTs sort of seem to have, in a very tribal space, NFTs have sort of unified a community sort of behind them. How do you sort of think about this sort of culture and community going forward, and what are you excited about?
I, in my entire life, have never seen anything priced in anything but, the dollar or a local currency, right? You price stuff in your country in Aussie dollars. And I guess it's intuitive that for digitally native communities, they're going to have digitally native currencies. But all of a sudden, when people started saying, hey, I bought that for 3 ETH, I was like, they're thinking in ETH. The authorities always worried people were going to use Bitcoin as a currency. And I was like, no one's going to buy anything in Bitcoin. They're going to hold their Bitcoin. But people are buying stuff in ETH and they're thinking in ETH. And that's a hugely important shift, right? How many ETH? What's your NFT collection worth? They say it's in ETH. They don't translate it into dollars. That's the first break of what's going to be the future. We are going to have lots of communities. You'll have a collection of tokens that represent your participation in opt-in communities that you care about, and you'll own them in your wallet. Some might be Bitcoin, some might be NFTs. You might have Ethereum. You might build on Solana. And so it's the first time I think it was very clear to me. And I said that the first time when Jay-Z told me he bought a CryptoPunk. And I was like, damn, if Jay-Z bought a CryptoPunk, everyone's going to buy a CryptoPunk. And, and that's where I came up with that phrase, the currency of culture. Jay-Z is culture. And you're seeing that, in rapid fire expansion. And so that's exciting.
Mike, there's a lot more we could cover. We haven't even gotten to Kanye yet, but let's say thank you very much for taking the time. Ladies and gentlemen, Mike Novogratz.
Thanks, guys.